Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the sort of doom and gloom that the news services provide us with geopolitical events has sort of subsided somewhat, and you're going to expect this with that with Macron calling on that snap election. You're going to see weeks where there's a positive euro tone, then a negative euro tone. That's just the way the cycle of the news goes. So at the moment, we are seeing a little bit of a slight reprieve on the euro. Okay, so. And just looking at the charts, there's a couple of things happening here that you need to keep sort of in mind as we go through the course of trading this week and coming up, because I think the dollar is massively overdone. And if the US numbers this week, particularly the US retail sales, industrial production numbers today come out weaker, well, this move that we saw on the dollar, right, is going to be corrected, right, back to where it was. And I think it's heavily on the card. So just looking at the euro, right, it's sort of bringing itself up off the floor. We still have resistance up here around 107.70, and you're seeing sterling go with it, Aussie, Kiwi, right? So that tells me it's a dollar move as well, right? Not just euro, which these four bottom pairs correlate, but the dollar seems to be giving up some ground here as well, the dollar index. Now, don't get sort of, I use the dollar index as a dollar proxy, right? But euro is 58% of the basket. So if euro goes up, the dollar index usually just goes down. So it's just there as a bit of a confluence sort of gauge to make sure things are working correctly. Now, excuse me, dollar Swiss sort of drifting lower. Dollar yen, the carry trade still on. But we are seeing dollar CAD sort of drifting back towards that support line, right? So that's definitely worth keeping an eye on as we go forward. I'll throw oil on that in a second and we'll see exactly what's happening there. But just this is what I'm talking about when I'm saying just keep abreast of things that are happening, because in the underlying market, right? So we've got the equity markets going up, US equity futures. Now that tells me they usually only go up when there's like less chance of interest rate hikes or longer term rates, higher rates in the US. Now, the US Treasury yields have slowly drifted lower, and especially the long-dated stuff. The short-dated stuff, 2 years, still hanging in there. But you know what? The pressure is off the dollar here, right? As far as long-term rates goes, and I was sort of saying this the last week, from what we saw weaker US CPI numbers. Then we had the Fed. The Fed, it looks like they'd come out and already sort of set their speech before the US CPI numbers, because it was quite sort of tough. Right, we're going to keep rates on hold. We're going to watch the data, especially inflation and unemployment. They've really brought unemployment into it, and unemployment is sort of drifting out, right? So, and you look at the global 10-year rates, right? Yeah, of course the US is up there at the top at 4.28%, but it's not far from where the Aussie, Kiwi, actually the Kiwi looks like it's a little bit higher. But so the other rates, 10-year bonds, aren't that far apart. So, you know what? I think the dollar is a little bit overcooked here, right? So to me, it's a real case of just watch and see. Like at the moment, we do have like a risk on profile. Okay, US equity futures up, euro, sterling, Aussie, Kiwi up as well, and the dollar down, right? Obviously, dollar yen, the odd one out. But that builds confidence in what I'm looking for. I'm looking for a trading opportunity here to get my teeth into, because, and this is where you got to manage your overall performance and actually what the market gives us, because we're in a sort of state again where, you know, we don't have massive trending markets, but we see we saw the move up here in the with the US CPI numbers, then slow move down after the Fed came out and said they're going to keep rates on hold. And now we're sort of coming back, grinding away again. So to me, there's a good trading opportunity today. And it really focuses on, if I just come across here, let me get the page up, save me changing screens. It focuses on the US retail sales, right? This is a really solid second tier number. Quite frequently, I'd say in the past, it's always been pretty much top tier. Now, the retail sales figures, okay, in this situation, we've got the dollar sort of slight weakness, euro stabilized geopolitically. And what we could see is these numbers here really give us a good look at the underbelly of the US market. Now, Unemployment blew out to 4%. I guess it's not a major blowout, but it's weakening. US CPI is weaker. Okay, US PPI was weaker. The numbers are now weak. It looks like the Fed have already, as I said, had already constructed their speech and their comments before the US CPI numbers. If these numbers come out weak, right, the retail sales number 0.2 and the range here 0.1 to 0.5. Okay, same with X autos. This is going to put a real change of complexion for the Fed, because if retail sales drops, people aren't buying, right? It drops inflation, but it also, you know what, people will start getting laid off. Unemployment will escalate. And because the central banks are focusing on trying to get this inflation back into the band, but inflation is at the moment is isolated to the things we need, not what we want, right? And this is the problem. Fuel, food, energy costs, insurance and finance, rent, mortgages. These are the things that are driving inflation. Usually it's like people buying cars, going on holidays, buying clothes, all these things. So, you know what? If they're choking these economies, they are going to stumble very quickly, and we are going to see a turnaround. I think we might have already sort of seen it on the dollar. It's not really reflected in the price of or the value of the US dollar at the moment, but I think it will be coming up. So keep an eye on retail sales and also industrial production and capacity utilization. So these numbers here, like good historical numbers that have always had some influence on the market, but retail sales, definitely the key to it. And so when we come back to looking at the opportunities, it's a real easy situation to match up like euro, right? As I said, the geopolitical situation is driving euro down. Okay, weaker US CPI numbers took it back up. Then the Fed came in. Now we're getting stabilizing news out of Europe. All we need here is weaker US numbers, and we've got a level to get in at. You could actually be getting in at market, wherever that might be. But I would suggest by the time the US retail sales figures come out, it'll be closer to this trend line. And that's where we sort of want to be looking at the market. 107.72 is the number. So to me, the best trading opportunity right now or today will lie with those US numbers, and the euro is a soft target, right? Looking to get long either on the release of weaker numbers or on a break of that trend line. And ideally, what do we need? Well, we want numbers that are weaker than the minimum, ideally, right? That means we will get a more sustained move. But even if the numbers are weaker, well, to be weaker than the pole, it actually is on the minimum range. So that's what we're looking for. We get that by euro. It can't be easier. Like, just isolate the best pair. Now, I've just focused on euro because of the stabilizing geopolitical backdrop of France and everything. But you know what? You might find another diamond in the rough here. So have a look through your charts. Like the sterling's already sort of broken through, as has the Aussie. Kiwi might be the one, right? And I don't get too involved in the Kiwi too often. It's hit me a lot. But that could be something to look at. And in particular, keep an eye on dollar CAD. It's got a great technical setup here at the moment too, and really is ready for a flush out. So that's my take on it at the moment. Look at the US retail sales figures. Euro's a sitting target, probably CAD as well. And we'll see how we go. All right, guys, have a good one. All the best. Cheerio.